Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Former President Donald Trump is safe after what the FBI says was a likely second assassination attempt. A suspect is in custody. Markets prepare for a big central bank decision this week, with traders split on whether the Fed will cut by 25 or 50 basis points. And Germany imposes controls at all of its 9 land borders as Chancellor Olaf Scholz faces increasing pressures over migration.
Let's talk about where we are with the markets. Welcome, everybody, to Fed Week, and you are certainly seeing no reaction at the moment in equities. Equities are sitting on their hands on both sides of the Atlantic. Euro stocks futures doing nothing, S&P futures doing absolutely nothing. But take a look at what is happening with gold. Gold is hitting a fresh record high. We're about to get treasuries opening as well. We'll see what the story there is, but there is this expectation growing that we see 50 from the Fed. Look at dollar yen. Look at that. We're through 140. Haven't seen that for a while, have we? Haven't seen that since 2023. So equity markets becalmed. Elsewhere, everybody else is gearing up for a big week from central banks. The countdown to the opening trade starts right now. Monday the 16th, good morning, everybody. The dollar is down. That's your best indicator as to what is happening with expectations surrounding central banks. It's not just the Fed. We've got other central banks to think about as well this week. Of course, the Bank of England is on deck, and we get CPI data out of the UK. But the dollar is down and continues to move lower. But it looks like, Anna, it also took another leg lower on news of a second assassination attempt on Donald Trump.
Yes, absolutely. The FBI calling this an assassination attempt, saying that, you know, a suspect is now in custody. He was challenged by Secret Service because he was wielding an assault rifle on a golf course. He was one hole ahead of Donald Trump. So that gives you a sense of how close he got to the former president, who, of course, is running once again. And what we have to think about here is, of course, this doesn't come all that many months after what happened in July, where he was more seriously injured and shots were actually fired at him, of course, as we know. That just came before the Republican National Congress, and that strengthened him in the polls a little. And it just goes to underscore the unpredictable nature of the run-up to the US presidential election. And, you know, you can look at the polls as they are right now and really not know anything about all the events that are going to unfold between now and then.
I think unpredictable is charitable. I think chaotic is probably a kind of maybe another way of thinking about this. As you say, very, very close, don't know. Doesn't appear to be much of a reaction in the betting odds at the moment. There was after the first attempt. The image is maybe a little bit more iconic coming out of that first attempt on his life. This time round, there doesn't seem to be much discernible difference in terms of the way the betting odds are approaching it. We did see that move in the dollar, though. I wonder whether that was just allied more maybe to some of the other things that were going on around the world as well. Difficult to kind of figure out causation.
Yes, absolutely. And there'll be lots of investigations. There will be an investigation into his motives. There does, from his social media history, there does seem
potential
to be
assassin.
Exactly. Sorry, yes, exactly that. Ryan Routh. There does seem to be some. He was raising questions about Ukraine and US policy there. So we'll see whether that really was the motivation or what comes out of it. But it is difficult to discern whether markets are moving on that at all, or whether it is all about the Fed this week and the other central banks, Guy, because we have yields just opening lower again this morning, down another 2.7 basis points on the 2-year. This after yields closed Friday at a 2-year low. Is the Fed going to take a skip or a jump at the start of their rate-cutting cycle, according to John Authers? That's the way he's looking at it this morning. Will it be 25? Will it be 50? That's just one of the central banks we're focused on.
We seem to have changed the narrative a little bit, in as much as previously there was this expectation that if they went 50, there would be nervousness in the market. There would be this idea that the Fed knows something that we don't, that as a result, we should conclude that, therefore, the economy is slowing more aggressively. That narrative seems to have shifted. There's a number of kind of very well-renowned economists out there talking about the fact that they need to go 50, that they need to get... They need to catch up, basically, to where the economic data is right now and ultimately will be because of the lags. So it's become it's become a much more muddled conversation, I think, as to why the Fed would move 50 and what signal we should take from it. Should we see it as good news or should we see it as bad news?
Yes, exactly. And that panic question is a really good one, because that had been in our conversations a lot in recent weeks. But there seem to be quite a lot of credible voices, as you say. JP Morgan's still saying that they expect to see a 50 basis point cut. Interesting, Priya Misra in our written work by our colleagues, talking about a lot will depend. The market response could depend a lot on how they spin this. And and that will come down to the dots.
Yeah.
There's 100 basis points priced in of cuts to the end of this year. The dots are going to give us a really big clue on November, December, because we're only going to get 2 more decisions after this one up to the end of the year. And so there's going to be a lot of focus on those dots and just how much cutting is factored in there, as well as the 25 versus 50 decision.
So the narrative also seems to have shifted around 25. So if we get 25, the expectation now is that it will be a very dovish 25, i.e. that they will open the door to potentially bigger cuts further down the road, that they will talk about a fairly significant rate-cutting cycle, and that there is much more still to come. And I just wonder where we do seem to be... If we don't get 50, we'll get a 25 that is 50-like.
Yes, so it'll be the thing they do added to the dots movement, won't it?
And the language that Powell delivers around in the press conference.
Absolutely. And then, of course, worth noting, we have the Bank of England, of course, no change there, no change at the BOJ. That's the expectation. But there, again, we'll be looking for any guidance, any suggestion of when the next cuts come. And also on the macro backdrop, we have to have a word about China. Weak data coming once again out of China. And this time, the PBOC accompanying that data with a statement saying that they will be taking action. So we'll look for action there.
Yeah, the action thus far has delivered very little in terms of discernible difference in sort of halting the rate of decline that we're seeing. It is now starting to really have a meaningful impact. And you do wonder at some point whether or not we're going to have to see shock and awe coming through. Let's talk about the other story that I think is fascinating around Europe this morning, and that is what is happening on the immigration front. We're going to talk to Ollie Crook about this a little bit later on. Let me just get my notes, because I think it's worth thinking about here. There's a series of events around Europe today that are related to the immigration story. And I think this folds back into the inflation story as well, which is certainly a central bank theme. But you've got Germany closing its land borders or restricting movement on its land borders today. You've got Meloni, Starmer talking about immigration. You've got the Dutch back end of last week talking about a new crisis law which will effectively, potentially, point us towards forcible deportations. The Swedes are upping the repatriation grants they're giving to people. And that was a story that came through at the back end of last week. This is a rapidly growing story in Europe at the moment. And I wonder ultimately where it leads and whether, from a sort of markets perspective, whether it takes us back to this higher inflation narrative.
Yes, absolutely, because higher inflation, part of the reason there is tight labour markets.
Yep.
And that is what those who think that we need more labour in Europe argue is one of the reasons why you need to have migration. And to that end, we've seen, even though Olaf Scholz is under pressure politically, we've got another regional election coming up next weekend, and we've got these changes in the border controls today on the west side of Germany, as well as what we've seen already on the east. Even though he's under that political pressure, he's spent the weekend visiting various countries or receiving visits from countries to do deals around migration, to allow skilled workers into Germany, because there are areas of the economy where they're deemed to be, short on skilled labour. So this was meaning Kenya, Uzbekistan, and he's got a meeting in Kazakhstan today.
But this is managed and unmanaged.
Yes.
And that seems to be the difference that is emerging at the moment, how you manage this process. And politicians are desperately trying to figure out ways to manage the process, to deliver the skills the economies need in order to grow, at the same time as dealing with the backlash against unmanaged immigration. I just folded another element to this as well, which is there's a letter written by a number of economists that have been written to Rachel Reeves here in the UK, urging her to abandon some of the fiscal rules and to spend heavily on infrastructure here in the UK. Again, this comes back to the migration story in a number of ways, which is that as you allow significant amounts of immigration to happen, you put stress on your infrastructure that is already stressed and some would argue crumbling. So the bond market has another way of thinking about this, is where our government's going to have to spend their way out of this as well in order to deliver the infrastructure for the growing population. Yeah,
absolutely. I mean, low birth rates, migration, productivity, spending on infrastructure, it all is linked. And we do see Keir Starmer picking up some of the threads of these conversations in Italy today. Migration, no doubt, will be one of the things that he's talking to Giorgia Meloni about, although he will also be talking about Ukraine and use of various weapons that we talked about the back end of last week.
Let's talk about what we've got coming up on the show. Talk about some of the central bank themes we're going to fold into the conversation as well. Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity, is going to join us. He says neither the Fed nor the market can predict the pace of future cuts. We'll continue that conversation after the opening trade. Wei Li is going to join us from BlackRock, Global Chief Investment Strategist there. 25 on the deck, they think, from the Fed this week. And we'll get the outlook for commodities. And as just mentioned, what is happening in China. Look at what is happening with the iron ore price this morning, what's happening with copper. Then compare and contrast that with what's happening with gold. Sloth Hansen of Saxo Bank is going to join us on that very subject.
Yeah, absolutely. Let's also focus in on some of the things that are happening today. In terms of the trading diary ahead, we've got some speakers from the ECB. De Guindos and Lane are going to be speaking. We are also focused on some data out of Germany, the ZEW Business Sentiment Survey, as well as some data out of the United States, retail sales perhaps in focus. We will get on Wednesday then the Fed rate decision. We will also get CPI data in the UK, which comes just a day before the Bank of England's rate decision. And then we close out the week with the Bank of Japan rate decision and euro area consumer confidence. We get this 36-hour period, Guy, where we have so many central banks giving us their latest thoughts. And even where we don't see movement, we could see a lot of movement in markets. I mean, we're just looking at dollar yen. You mentioned, the dollar moving today, the yen on the rise this morning, and in fact on the rise to such an extent that we've been down to 139 as a handle earlier on today. We're back over it again. We're at 140.18. But that's two things, isn't it? That's if there is risk aversion around the Trump story, there might be some of that in there. But of course, it's the Fed narrative and whether they go 50. And 50 seems to have excited some areas of risk assets.
There's been a lot
recently.
of Wall Street Journal commentary over the last couple of days, which seems to be pointing us towards 50. I don't know whether or not we should read anything into that and whether or not there is communication happening here or the Fed is trying to communicate with the market. I don't know. But certainly there's a couple of significant articles that seem to point us in the direction of 50.
Yes, and the last time we heard from the BOJ, we remember, heard with a rate decision from the BOJ, we remember what happened there at the beginning of August. That was an extremely dramatic time. Huge risk aversion as we saw a bit of an unwind of the carry trade. I say a bit because it's always difficult. Seems pretty substantial at the time.
How much? Who knows?
But it's always difficult to get a sense of exactly how much of that carry trade remains in play. But if it is, then interest rate differentials once again on display with that Fed decision and the BOJ rate decision. Are we going to get wage data out of Japan as well, just ahead of that BOJ rate decision?
The board you brought up just a moment ago in terms of the week that we're looking at, quite busy. There's a lot going on this week. Let's talk about other things you need to know this Monday morning. Torrential rain over the last few days has led to devastating flooding across large swathes of Central and Eastern Europe. The conditions have seen evacuations, damage to homes and infrastructure, as well as disruption to transportation. Still raining. I checked the weather in Vienna this morning. Tomorrow, the rest of the week, starting to improve. Staying with that theme, the strongest typhoon in more than 7 decades has landed in Shanghai, bringing gale-force winds and heavy rain to the eastern seaboard. The city initiated a top-level emergency response yesterday, suspending railways, closing ports, bridges and highways. And UK home sellers have raised the prices for homes by twice the usual rate in September, signalling new optimism in the wake of the Bank of England's first interest rate cut in more than 4 years. I don't know whether, as a Brit, whether or not I should talk about the weather or whether I should talk about house prices.
Well, yeah, both guaranteed on the agenda at many a social gathering. Interesting to think about where the Bank of England does go next. We will hear from them this week. No expectation of change. But you flagged just last week, wasn't it, the weakness that we got in that GDP number. It was just another month, but it's another month that adds up. And another reason to maybe give thought to when we get another rate cut from the Bank of England.
The pressure is certainly building, I think, for the Bank of England to become more dovish. That certainly seems to be the expectation. While it's probably at the more hawkish end of the spectrum when it comes to central banks, the data are starting maybe to move on the softer side. But we do have a budget coming up.
We do, and the extent to which we get tax rises in that, how the Bank of England is going to respond, that won't be the conversation this week, at least in the sense that, people will ask, and the Bank of England will also say, well, we just react to the fiscal hand we're given. We know that. But when that fiscal hand is given, what will the response be from the Bank of England?
So I think it's much harder to call the Bank of England in advance of that. And I think the changes that come after it will have a meaningful impact in the way that the bank thinks about what it does next. So I think it's very hard, to call the Bank of England at the moment. I think that fiscal event... usually these fiscal events are interesting, sort of interesting. This one feels very interesting, and as much as it feels like it could be quite a big game changer in the way that the British economy reacts. Yes,
first Labour government budget in a long time. Coming up on the programme then, we'll get back to our top story. Donald Trump survives a second assassination attempt, what we know and what it could mean for the election. Plus, how BMW's latest recall could spell even more trouble for a German car industry in crisis. Up next, a big week for central banks, what traders are expecting from the Fed on Wednesday. If you have any questions, if you want us to put those to our guests, then please join in the conversation. IB plus BBTV Go, that is the function to use this Monday morning and every Monday morning. Every morning, in fact, if you want to get in touch with the show producers. This is Bloomberg.
If I were in the room, I would actually be pushing for a 50 basis point rather than a 25 basis point cut. I think the balance of risks has shifted from a risk that inflation doesn't come down as we hope to a risk that unemployment grows up faster than we would hope and employment doesn't grow as fast as we would hope.
Ralph Schlossstein, the Chairman Emeritus at Evercore and BlackRock co-founder, of course, speaking to this team Friday. Let's get another take on what we're going to see this week from the Fed. Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International, now sitting around the table with us. So let me give you your shot, 50 or 25.
So look, we are in the 25 camp. With the context that so far this cycle, one thing is very clear is that both the markets or the Fed have no idea what the Fed will do.
Right.
We started with...
So we should ignore the dots, right?
Yeah, exactly. I mean, if you look at the dots, they moved from 3 dots this year, 3 cuts this year to 1 cut. They've been all over the place so far. And the market's assessment has been all over the place as well. And I think there is, rightly so, there is a shift towards focus on the labor market. Yes, the labor market is slowing, but it is not, falling off the cliff. So 25 with a press conference which shows that, if data deteriorates, I think is
So should we classify this as a neutral 25 or a dovish 25?
I think there will be an attempt to do the neutral 25 given the pressure of the market here and of course the fact that the labor market is slowing. But so far in this cycle the Fed has been data dependent, flexible, they have given up on forecasting, focused on spot data, and that's where we are. But yes, it is going to be a difficult communication exercise.
Salman, good morning. What would you expect the markets to do, various asset classes then, if we quote-unquote only get 25? Because, would we see dollar strength? Will we see equities sell off with disappointment? The market is factoring in, or the dots, I think, are showing 100 basis points between now and the end of the year. And if we only get 25, there'll be a lot of focus on what the remaining dots, the remaining 2 meetings might deliver.
Definitely, and I think 50, the bond market will be happy for sure. But I think I'm concerned about the equity market, how they read the 50. There's already a little bit of fragility in the equity market underneath the surface. So if they start thinking that there's a lot more weakness in the consumer coming through and the 50 signals that, I'm concerned about that. 25, of course, the bond market is not going to be happy. Dollar will like it because there's been a lot of front loading of those cuts. But I think beyond that, I think very quickly we'll move towards the next set of data because that will decide whether we get, that sequence, if you will. And to your point on the dot plot, yes, and I think the press conference will be important. How much Chair Powell owns the dot plot because he has a history of have a love-hate relationship with the dots.
Last week, when we talked to Ralph Schlossstein, he was saying the reason that the market needs, or that the economy, rather, needs a bigger rate cut, needs 50 in his view, it's not because big companies need it. Guy was making the point, they've all refinanced at low rates. Their balance sheets are pretty strong. Even households' balance sheets, people tell us to some degree, pretty strong. But what needs it is the housing market and small, medium-sized enterprises, that area. Can you see an argument for 50 in that context?
In an absolute sense, yes. But I think what is important is what happened late last year. In November, the Fed wanted to go and start cutting in March, and they were not able to do that. They eased financial conditions, and inflation came back. And in the last report, we had some signs of a sticky inflation. So I think there is although the labor market still dominates, and that argument, I agree with you, points to 50, but inflation is not dead. And if you ease financial conditions too quickly, then you may be in a situation that you have to not only stop, but may have to reassess another cycle. So that's, I think, the risk management exercise in play, at least to our minds.
Near term, it sounds like I want to buy the dollar into this meeting, though.
Yes, so exactly. I think there's quite a bit of front loading into those cuts. So we are expecting some, dollar, rebound here. But at the same time, I think the longevity of it will depend on, how the labor market proceeds from here. If there's a proper cracking, then the dollar can under pressure.
The Chinese data is absolutely terrible right now, but it's been masked by the fact that the US economy looks good. Yes. If the US economy starts slowing down, and you've got China and the US slowing down, what does that signal for the global economy, and how should I think as an investor about that?
I think that will, to your point, Guy, I think it will create this synchronized global slowdown story. Remember, Europe is not doing that well at all either. So I think that's the story which I think the equity market will be very sensitive to, because obviously in parts of the markets we know valuations are very tight. Consumer has been the driver, or U.S. consumer, I should say, has been the driver of this global cycle. If that starts to wilt, then I think we are talking about elevated probabilities of recession coming in onto the picture.
And that leaves the BOJ looking like even more of an outlier, perhaps. And does that risk further wild swings in markets, as we saw at the beginning of August? If we do have, China and the rest of, China and the US really slowing down, and yet Japan still, inflation's going a little higher, wages, something to be worried about, apparently, and therefore tightening.
Yes, so to your point, I think if you look at the fundamental picture in Japan, it's consistent with more hikes. In fact, they started late. They should have started earlier. When the Fed was hiking aggressively, that was the time to hike. Obviously, they took their time. But I think now they are in a situation where, as you said, they look, will look like an outlier, and they have to calibrate policy very, very carefully, because positioning is becoming very, very volatile. And we do think that there will be more hikes, and yen can benefit from this environment.
And the yen is benefiting this morning. It has been. It's up 0.6%. It went through 139 into 139 territory. Now it's at 140. Are you a little nervous around a BOJ meeting this week? The last one was pretty eventful.
Yes. No, all these meetings are, right now keeping us on the edge. Obviously, the Fed being the more important one, I think closely followed by the BOJ in terms of, I think it will set the tone for the next few months as we move towards the end of the year.
Can I ignore the Bank of England until we get Rachel Reeves' budget?
I think, yes, because I think sticky inflation, and the Bank of England, to be fair with you, has been quite patient and more stable than other key central banks. And I think, and this is something we should, we have seen that in the currency behavior as well. So I think this time around, I think it's wait and see, and obviously the budget, and then, of course, more prints on inflation, because services inflation in the UK are still very, very sticky.
So in terms of what that... So I'm trying to put it all together and trying to sort of think about kind of how the processes are going to unfold. The market is expecting quite a lot from the Fed over the next few meetings, less so for the Bank of England. The ECB seems very data dependent at the moment. How does this show up in asset classes? Give me a sense of where I want to be to play the themes that you've just laid out in terms of how central banks are going to be reacting.
So from an asset allocation perspective, we have been taking some profits from our equity longs, because we have been long equities for most of the year. The soft landing has been playing out. But we think that, seasonality, too much, focus on the Fed, and then, of course, some parts of the market feeling that valuation, pressure. We think that there's time to take some, take some chips off the table. And then on bond markets, I think we have turned neutral, because we think
it's been a big move.
Yeah, it's a big move, and then you are relying on the Fed to deliver to perfection. What you want in terms of timing and the magnitude.
So you're cautious on equities and you're cautious on bonds. Yes. So in 10 seconds, where are you putting your money?
So we are basically going towards, a lot of RV trades, for example, carry trades in the EMs. We are starting to rebuild.
Okay.
We are also, I think, keeping our powder dry, because if there is a significant drawdown in equities, we want to buy into it.
Salman, thank you very much. Thanks for joining us. Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International. Coming up, after a second assassination attempt on former US President Donald Trump, we will look at what the incident means.
30 minutes to the start of equity trading here in Europe this Monday morning. Let's take a look at what the futures board is signalling for us. I suspect not very much. The expectation is we're going to see maybe a little bit of weakness coming through. Judging by the picture you see in front of you, I would say that we've softened a little bit over the last half hour as Europe has kind of thought about what the week is going to bring. S&P futures very, very quiet this morning. It appears that equity markets may just decide to sit on their hands and wait and see exactly what is delivered. The bond markets, obviously a firm focus as well. We start to get a sense of the trade this morning out of Europe. As you can see, a little bit back into the bond market. But again, maybe some caution.
Yes, maybe some caution. It's going to be a busy week, that is for sure. And into that busy week of plenty of monetary policy activity, let us put some political uncertainty and some political drama. Former US President Donald Trump is said to be safe and unharmed after an apparent second assassination attempt. It's believed the Secret Service detail opened fire on a man who was wielding an assault rifle at Trump's West Palm Beach golf course in Florida.
Former President Donald Trump is safe and unharmed. following a protective incident shortly before 2 p.m. on Sunday at Trump International Golf Club at West Palm Beach. The U.S. Secret Service personnel opened fire on a gunman located near the property line, and this matter is under investigation.
Let's get more on this story. Bloomberg's news director for EMEA, Rosalind Matheson, with us on set this Monday morning. Ros, good morning to you. So what do we know about the alleged shooter? We know he's in custody, potential motives, any picture building here?
There's a lot we don't know so far. Obviously, we know he was at the golf course. The advanced security guard seems to have discovered him ahead of Donald Trump and opened fire. He then tried to escape and was caught, as you say, and is now in custody. He's a 58-year-old man. It looks like he's moved in different parts of America. He's worked in construction. He does have prior offences, but mostly for more minor things. There are some arms offences apparently in there. In terms of motivation, it's very unclear. Obviously, this is very early days. We know from his social media accounts that he seems to have been a small fry donor to the Democratic Party. At some point, he may have also been a supporter of Donald Trump, who then shifted away from supporting Donald Trump. What we do know is an avid supporter of Ukraine. That seems to be a very strong political thing for him, was supporting Ukraine against Russia, volunteering himself to go and fight, even though he had no combat experience. So someone who fervently believed in Ukraine, and whether that fed into anything remains to be seen.
The first assassination attempt delivered a significant move in the polls for Donald Trump. Positive for Donald Trump. Are we seeing anything similar this time around?
We may see some of that. Obviously, Donald Trump's been having a bit of a tricky couple of days.
Yep.
I mean, after the debate, the sense that his campaign was teetering a bit with some of the things he was saying and doing in public. And this may offer the opportunity for Donald Trump to reset his campaign and the narrative around him. But what does that do in terms of the polls so close to the election? And particularly, does it re-energise his base, but does it bring fresh voters towards him? Because, again, you can talk to your base all you want and get them energised, but are you going to bring fresh voters out on election day, particularly, again, from those swing states, and motivate them to vote for you? That connection, it's obviously too early to say.
What's the response from this, across the political spectrum been, Ros, to this? Lots of people decrying the violence, of course.
Well, that's right. So on both sides of the aisle, obviously, saying that violence has no place in America, but again, political violence, and two in quick succession, obviously, including from the Democrats, Kamala Harris, his opponent in the election, but also Republicans coming out and saying, see, again, this is why Donald Trump is speaking truth to power, whatever he likes to cast his campaign as, and that he's being fearless about it. And this is what, it's attracting. And Donald Trump obviously using the moment to say, I'm safe, I'm still fighting, the rallying stuff that we saw him do after the first assassination attempt against him. So the rhetoric is very, very similar. Again, the question is, how does it play out in the campaign in the remaining weeks is the real question.
In terms of what this signals about how the Secret Service is dealing with the security events around Donald Trump, are they being forced to take a much tighter approach to his security? And does that have limitations, does that impose limitations on what he does?
Well, certainly after that initial assassination attempt, they came under heavy scrutiny and criticism. How could this have happened? There were hearings in Washington, that all went on, and they really tightened security around him. They amped it up significantly. In this case, obviously, the advanced party discovered this man in the bushes and acted upon it, before Donald Trump came on the scene. But, Donald Trump is also someone who does like to feel like he's close to people. That's part of his personal appeal, is he goes and talks to people. And if you're standing at podiums from afar all the time and not engaging in that way one-on-one, how do you come across in that? That's a challenge for any, political candidate, obviously. But for Donald Trump, too, getting that personal connection is really key in those remaining weeks.
Yeah, we've compared this to July. Clearly, the attempt was more serious in July. There was actually a shot fired at him, and his ear was injured as a result. And as a result, there was photography, and there was an iconic sort of image of him with his fist raised, acting defiant, in sort of acting out the words that he is once again saying, as you say, Ross, trying to draw that parallel, perhaps. That travelled far, didn't it? That image, and maybe had something to do with the bump. This time there will be none of that. So I guess it comes back to where we started. Really unclear as to whether this will give him some kind of bump in the polls.
Well, yes, and if so, for how long? Because obviously voters' minds are also turning to probably the most important issue for them on election day, and that's the state of the US economy. People tend to vote fundamentally about bread and butter issues on the day, which is, the state of the job market, state of inflation and so on. And so attention is really shifting towards what are the policies going to be under a second Trump presidency, what would the policies be under Kamala Harris. And so this might give him, it might allow him to reset the narrative a bit around himself, because it was slipping in the past few days. But again, people are going to start to turn very quickly again to what will you do for me as president, for my economy.
Yes, and just to point out, those images we were showing, obviously prompted by my question about the July assassination attempt, that's not from this weekend. Those images were from July, so important to just point that out, Guy.
Absolutely. Ros, thank you very much indeed. Bloomberg EMEA News Director Rosalind Matheson. Let's turn our attention to another story that we are watching very carefully in the United States. Striking Boeing factory workers say they are ready to hold out for a better contract. The Machinists Union is preparing to meet with federal mediators to begin discussions. That will start Tuesday, i.e. tomorrow. Let's get more from Bloomberg's Benedict Camel, who is back from the United States and leads our aviation coverage. Benny, walk me through the process of federal mediation and what it tells us about the timeline to resolving this dispute.
So they're at a point now where they need that third party to help them through the stalemate. As you said, we had that strike commence last week. And shortly after the strike started, we had two downgrades, or potential downgrades, from rating companies. Fitch and Moody's both said that the strike might actually put a damper on Boeing's finances, and therefore their already very low credit rating is at risk of being cut into junk. So that really sort of increased the pressure on the company to get a resolution here. It looks, the imagery is quite stark. A lot of protests, a lot of angry workers. But behind the scenes, what we are hearing is that they're not that far apart. So the hope really is that in the next couple of days, maybe even, they might be able to get a resolution. That's where the mediator comes in. The two sides will sit down. They're going to meet for the first time tomorrow, and we might get a bit more of a sense of directionally where things are going after that.
Benedict, give us a sense of where the movement might be, I suppose, because some of the numbers being talked about didn't look small in terms of pay increases, but there's obviously always a backstory there. And some of the, maybe it comes down to some of the wider conditions and working conditions as well. What kind of movement are we watching for?
It's probably going to be on the bonus side and maybe on the base pay. So Boeing has come out saying we want to give you 25% on top. That's not a small number, particularly for a company that's bleeding cash. And they said this was really, we put our best foot forward. This is as far as we could push it. But the company also has a very sort of simple calculus. The longer the strike lasts, the more it'll cost them. So it's probably easier for them to throw in a little extra money and to avert a long, drawn-out strike than to risk workers staying off work for longer. So we're going to see something on the base pay. We might see something on the bonus. There's an important commitment to the region, to the Seattle region. They said that their next plane would be built there, so they've already thrown that one into the ring. But really, it's on the basic numbers, and you might see a bit of a divide inside the Boeing workers. You have a fairly young workforce now. They've had a lot of turnover there, and the younger people might say, look, if we ride this for many years, then actually it's not a bad deal. It's the older people that are sort of close to retirement that might say, look, we're not going to get a lot out of this. So if they manage to convince younger people, if you stick with us and you stay with us for a long time, you will actually get a good deal out of this, and that will help them.
Benny, how heavily has Kelly Ortberg, the new CEO, been involved in the negotiations thus far, and does he need to become more involved as we start this strike?
So he has been generally a lot more involved. Boeing made a point about saying he has bought a house in the Seattle region. Now, that's a big point because that's a real contrast to his predecessor, Dave Calhoun, who sort of ran the company from the other side of the country. So he's made a point about physically being at Boeing in Seattle, and he's walking the factory floors. He's engaging with people, so he's really sort of thrown his weight behind it. He's not visibly become he's not become that visible at this point, so he sort of kept his powder dry a little bit. So we might get a little bit more of that in the next couple of days. But he is engaged. He did send a memo on the eve of the vote saying, everyone, I really urge you to go with this offer. There's no gain to be had from looking back at the last 10 years where we had some bad deals. And, you know, look forward. This is a really good deal for you. Some workers took that as a little bit of a threat and voted the other way. So if he can sort of temper his words, shall we say, a little bit in the eyes of the workers, that will also help. So he definitely plays a crucial role in this.
Even before this strike activity started, Benny, this was a business that had issues and was in trouble to some degree. So even if this is fixed, he'll still have a busy in-tray.
Absolutely. I mean, this is one more problem for them. I mean, this is a company that, as you said, has lots of issues, and a strike is a massively disruptive event for an already disrupted company. It's going to put work out of sequence, the so-called travelled work, as it's called. That means that they're not really producing the planes in the order that they're supposed to. It's going to cost them more cash. The deliveries will slow down even further. There's the question of what does it mean for suppliers. So all of these things are going to disrupt the company further. And as you said, a company that's already troubled, that had that January 5th blowout of the fuselage, which really sort of set in motion this event, this line of events that we're in right now. So one more issue for them. And if you can get this resolved, it might go a long way to sort of reset the basics of Boeing and the relationship between management and Boeing, because that's another thing. There was always a sense that there's a disconnect between the top of the company and the factory work floor. So if he can engage, get the people on his side, that will help everyone.
Benny, thanks very much. Bloomberg's Benedict Camel joining us there from Berlin with the latest on Boeing, this big aviation story with some global impact, of course. Coming up on the programme, we'll get a focus on the stocks we're watching this Monday morning. It's reported that UniCredit intends to be, quote, an active shareholder in Germany's Commerzbank. More on that and your other stocks to watch next. This is Bloomberg. Welcome back, 7:46 here in London. So Monday morning's trading session around 14 minutes from now, and futures suggest a little bit of downside at the start of trade. US futures flat to negative. Joining us now to talk about the markets in 3 minutes, Paul Dobson, Bloomberg's executive editor for Asia markets. And from your vantage point over in Asia, Paul, good morning. What are we expecting from the Fed then this week, or what do we think markets are going to be focused on? Because clearly it's the 25 versus 50 decision, but then there's the summary of economic projections, an update. We haven't had one in a while on the dot plot, and a lot of people are going to be looking for what clues the dot plot has in there to sit alongside the action that the Fed actually takes.
That's right, Anna. The market will no doubt be most attuned to whether the Fed starts with a 50 basis point cut or just a 25 basis point cut. But it is also this idea of what a Fed policymaker is going to tell us about their plans for action for the rest of the year. Economists are thinking 25, 25, 25 based on our survey on average. And a lot of them are saying if they start with 25, they're not going to be factoring in more steep cuts later in the year based on the dot plot. On the other hand, you know, if they start with a 50, then how much more aggressive could the cutting be for the rest of the year? That might also show up. What is clear is we're at the start of this cutting cycle, and that is already getting markets pretty excited. And although last week it looked like we were moving away from a 50 basis point cut, that really has come back into pricing in quite a significant way over the last couple of sessions.
Paul, let's talk about cuts elsewhere in the world and actually talk about what is happening in China. The data over the weekend, once again, very disappointing. Should we be expecting something significant from the Chinese authorities, or is this just about delivering something that's okay, acceptable, and in line with targets?
I think that as far as officials are concerned, they're quite happy to get towards that 5% growth target. That's the goal. They don't want to go a lot harder. It doesn't seem like there's going to be any big bang kind of measures. On the other hand, we had this rare statement from the PBOC accompanying credit data on Friday night, talking about the idea that they want to stave off deflation, that they want to take a little bit more action, and promising some stuff to come down the line. Now, we've already had some exclusive reporting on the idea of these mortgage rate cuts coming through a little bit earlier than they otherwise would, and we can expect incremental measures like that. The stock market is getting a little bit of support from that, but probably a big bang kind of a move isn't something that the market is expecting at all.
Can I talk about FX markets then, Paul? We've got dollar yen back with a 139 handle once again this morning. 139.74 is where it trades right now. A substantial move higher then in the yen this morning as we wait for the Fed and wait for the BOJ. I know we've got thin liquidity perhaps in Asia because a lot of markets are closed. How much are we reading into this move?
I think if the Fed is going to cut aggressively, then the dollar is going to go down and the yen is going to be one of the biggest beneficiaries of that, given that the BOJ is continuing to hike. And it's maybe an underpriced risk of what we're going to hear from the BOJ this week. Remember, their meeting as well, kind of overshadowed by everything else that's going on. But if they do cough and splutter and give the idea that they might hike earlier in the year than the December that most people are expecting, that could give the yen another lift forwards.
Great stuff, Paul. Thank you very much indeed. Paul Dobson, Bloomberg's executive editor for Asia Markets. MLIV Go, the function on your Bloomberg to follow the rest of the team. Let's figure out what's happening on the single stock front this morning. Joe Easton, over to you.
Morning, guys. So we're starting over in France. We've got a bit of M&A news today for Rexel. Now, this is quite a large maker of electronic components, a wholesaler to the autos and construction industry, saying they rejected a takeover approach from XQO over in the US. Now, this potentially valued the firm at around $9 billion, so it's a pretty decent size in terms of the valuation there. And the pricing on the deal, around 28 euros a piece. We can see it trading at around 23, so potentially a massive premium for this one. We can see Rexel actually rallying quite a lot over the past 5-year period. A lot of exposure is in the US. About half of their revenue comes from the US, hence why they've gotten this bid from QXO over in the US, potentially looking to combine with the French company. We're also looking at Commerzbank once again, following that rally that we saw last week. Now, we've had some comments over the weekend from Andrea Orcel, the UniCredit CEO. Now, he's been talking about how they're potentially going to be a strategic investor and how they have a lot of things to team up on. But importantly, they do actually say that a merger could create significant value, according to Orcel. This is in comments to Handelsblatt over at the weekend. So that is still the thing. Will this turn into a full-blown merger for those two companies? We do see over the past week, Commerzbank up around 20%, the best week in a number of years for that stock. And we did actually see a bit of a gain in UniCredit as well. But these comments from Andrea Orcel in Handelsblatt at the weekend, potentially going to get a bit of focus in Europe this morning. Then in terms of ratings changes, a really rare downgrade today. Morgan Stanley is going underweight on Nestlé. Very unusual for them. I don't think they've ever actually been underweight the stock. They say that the company's going to need to spend more on marketing, invest more on advertising if it wants to rebound its growth. Of course, the maker of Kit Kat and Nespresso coffee, all of our favourite little treats and snacks. But as we can see, only 2 sells among all those analysts covering the stock there. A really rare thing. Nestlé is underweight at Morgan Stanley. Keep an eye on that one in Switzerland today.
Joe, thank you. Our equities reporter, Joe Easton, with your Monday stocks to watch. Let us talk European politics for a moment, Guy, because this is getting a little bit nasty, it seems. We're waiting for all the new European commissioners to be named. And Thierry Breton, who's the internal markets chief, very key player when it comes to the digital services act, often tangled with Elon Musk on social media. He's resigned today, saying that France was asked to provide a different nominee for the next European Commission. And what's interesting here is he's taking this argument with Ursula von der Leyen very much into the public domain. So if we're looking for further signs of sort of chaos politically within Europe, well, you've got one right here.
He has been, in some ways, out on his own over the last few weeks. He, as you say, has been pushing back on people like Elon Musk. The Commission has distanced itself from that. Is this just the reaction to that, or is this also part of Ursula von der Leyen's push to have a more diverse commission? Is that part of that process as well? Hard to see, but it looks Quite a lot of vitriol this morning.
Yes.
Coming from Thierry Breton.
Yes, the letter also making it all very public, and maybe he doesn't even know all of the reasons, because he says in his letter that Ursula von der Leyen asked France to withdraw his name for personal reasons that at no instance has she tried to talk to him about. So we'll see what comes of this. But yes, we'll get Oliver Crook back on the show later on today. He's going to be talking about some of the other strains on Europe right now around freedom of movement, for example, and, this another strain, I suppose, that we're seeing here in Europe.
Free movements. Internal markets, I guess it all probably goes hand in hand in terms of what we're seeing or not seeing in Europe right now. Germany closing a number of borders, had closed borders to the east, now closing borders to the west. So trying to get a handle on what is happening with the immigration story within the Schengen zone, which is the critical part of all of this.
Yes, absolutely. So we'd seen Germany already having these temporary controls on the eastern side with Poland, Austria and places. And now they're introducing them on all of their other land borders to Denmark, to the Netherlands, Belgium, to France as well. They have the ability to put up, police blocks and turn people away. All of this coming at a tense time in German politics. The rise of the AfD, we know, it came top in one of those state votes recently, second in another, and we have another regional election taking place next weekend.
But it's writ large across the whole of Europe. You look at what is happening today in terms of Keir Starmer's trip to Italy, which in theory is going to be, as you mentioned earlier, a conversation about what is happening in Ukraine, but also a message, a meeting of minds maybe on how they deal with the migration story. Both are dealing with sea borders that are causing them huge problems at the moment.
We will come back with the market open. The market open just 5 minutes away. European futures pointing a little lower this morning as the US futures. We'll be back with Monday's open. This is Bloomberg.
Monday, the 16th of September. Good morning. Couple of minutes to go until the start of equity trading here in Europe. Let's talk about the legacy from Friday's session into Monday. White lines, the Stock 600. Blue lines, the S&P, as you probably know by now. Not much clear guidance, I would argue, in terms of what this tells us about where we're going to open here this morning. That's the European close. The US market's closing pretty much in line with that. There was a little bit of a rally in the afternoon session in the United States, but no clear discernible difference in terms of kind of where Europe finished and where the US finished. Futures are a little softer, though, this morning. Let's turn you to what is happening with the futures story and show you what the numbers actually look like. We're not down by much. Stocks 50 down by around 0.3% Similar story for the FTSE 100 futures. Keep an eye on the miners maybe this morning. You've seen softness coming out of the Chinese data into some of the metals markets this morning. Nasdaq futures fairly flat as well, down by 0.2%. So I'm not sure there's a clear kind of obvious read across. I think Monday morning feels like a wait and see kind of story, Anna, as we think about how we're going to go with the Fed.
It certainly does. From a macro perspective, 36 hours in which things will change to some degree when it comes to interest rates around the world. We are expecting the Fed, of course, to start with its cutting cycle. That's the macro story. Back to the micro then, and the stocks that could be on the move this morning. As Joe was telling us, Rexel, the electrical equipment company over in France, rejecting an offer that came over the weekend, saying it undervalues the business, sticking to its plans that it presented at an investor day in the middle of the year. Commerzbank in focus, the CEO of UniCredit giving it the hard sell in the German media, talking to Handelsblatt, saying that they will be an active Commerzbank shareholder. It's important that they get both of these banks combined, he said. We'll also watch Nestlé on the back of that unusual downgrade we've seen from Morgan Stanley, Guy.
Yeah, we'll keep an eye and see how that one trades through into the Swiss market this morning. Here we go. Time for the opening trade this Monday morning. Let me show you some numbers. We're expecting a little bit of weakness, but not much. So that's what we're getting first up from the FTSE 100, as you can see. A little bit of red on the screen, down by 0.1% first thing this morning. We'll dive into the details in just a moment. The IBEX is down similar amounts, 0.2%. Stock 600 down by 0.2%. These are not dramatic moves, certainly at an index level. We'll keep an eye on what's happening with the German market this morning. That Rexel story, I think, fascinating in the French market as well this morning. The SMI, obviously, Nestlé is a heavyweight on that market, so we'll see what the Morgan Stanley downgrade does to that market as well. But the early indications are that we are a little bit soft. The CAC opening down, now down by 0.4%. London down by 0.3%. Similar story, I would argue, in terms of the numbers. Feels like a wait-and-see market this Monday morning.
Yeah, it does. And interesting to look at where we are on the sector picture then, Guy. We are kind of the opposite of what we saw on Friday. On Friday, most sectors were in positive territory and we were led higher by those retail names. earnings. Zalando in particular was doing really well. Bring you right up to date, and today we have nearly all sectors in negative territory. The only one that seems to be doing okay is utilities, and we are being led to the downside by technology, but also basic resources. And given we are light on players over in the Asian session, Guy, you wonder whether this has a lot to do with the weakness in the Chinese data that we got coming through at the weekend. Of course, factory output, consumption, investment all came in below expectations, and basic resource stocks then taking that pretty seriously this morning, it seems, down by 0.6%. Even though looking through the Asia session, we didn't have, you know, the commodities themselves weren't particularly weak. We were down 1% on iron ore, I guess, through the Asia session. But as I say, lots of people not working over in Asia today because Japan is closed, China is, mainland China at least, is closed.
And we're dealing with a typhoon as well, which we need to factor in too.
Into Shanghai, yes, absolutely.
AstraZeneca bouncing back, it's up by 0.6% this morning. In terms of this is where the weight is coming through in Europe this morning. Novo's up, LVMH is tracking higher as well. As you can see, in terms of the stock 600, stocks 50 actually, you've got AstraZeneca leading the story. LVMH is in there as well. Downside, that Nestle downgrade is appearing to have quite a significant impact. And the miners, as anticipated, maybe on the back of that Chinese data, is where we're also seeing some weakness. It's interesting to see some of the oil names are also softening up as well. Rolls-Royce is soft. I think that's interesting in the light of what we're seeing at Boeing, the ongoing strike there. Obviously, a big provider into the wide-body market when it comes to engines. So the picture this morning, is there a clear, discernible difference? LVMH is up on the back of weak China data, but it's not really a consumer data series that we're watching. So maybe we can sort of park that one and take it out of the LVMH story. I think it feels like wait and see.
Yeah, it does feel like wait and see. As you said, there's a lot of central bank decisions coming this week. We're also waiting to see what happens with Rexel at the start of the trading day. That one is halted, so we don't have an opening price there. It takes a little time sometimes on the back of these M&A stories to try and get an opening price. But they rejected a takeover offer, saying it undervalues the business. We'll watch for movement on that one.
We'll come back to the macro, though, while we wait and see exactly how that stock trades. It's going to be a busy week. It's a busy week, certainly, for central banks. I should say, not just one. We're not just focusing on the Fed. There are other central banks out there that you can choose from. Our next guest sees the Fed going for 25 this week, the BOE waiting until November. The BOJ, not going to see a hike there until January. Wei Li, BlackRock's Global Chief Investment Strategist, joining us around the table. 25 from the Fed. Why? Why not 50?
Well, if you look at the big picture, U.S. economy is doing okay.
Yep.
The Fed's on nowcast for GDP Q3 is tracking at 2.5% annualized. You look at the job market, the last 6 months, we're talking about averaging 164K monthly job creation. This is still pretty robust pace. You look at inflation, it's fallen down a lot, but at the same time, there are pockets of inflation that show some persistency. So when you bring all of this together, it warrants a cut for sure, the cutting cycle starting, but maybe not as deep as markets seem to be pricing.
Yep.
We're talking about 100 basis points, more than 100 basis points of cuts for this year, and more than 250 basis point cuts until the end of next year. That's way over the top.
So am I selling treasuries going into this and buying the dollar?
Well, at this juncture, actually last week, we downgraded U.S. front end from overweight to underweight for this very reason, because we think markets are a bit excessive in pricing the depth of the rate cut cycle. But we still like the belly of the curve because we think that income is attractive, but more of a relative value curve play at this point.
Wei Li, good morning. So if you think that markets are too aggressively pricing rate cuts and, yields have come down a little too far, what do you think the market's response will be if we only get, in inverted commas, a 25 basis point cut then? Do you think the markets will be disappointed with that, given the conversations that have happened in recent weeks?
Well, we have seen significant wild swings in rate pricing, right? So after the CPI print last week that surprised marginally to the upside, markets were pretty much talking about 25 basis point as a base case, and then the pricing for 50 basis point accelerated into the weekend. I would say that if we were to get just 25 basis point of cuts, bond market could be quite volatile because of the world pricing that we have seen already. But equity market, if you look at the bigger picture of growth, you look at the bigger picture of earnings, the Q2 earnings season actually saw all sectors beating expectations. When you have that backdrop, actually equities could still hold up okay, especially because the latest rhetoric around maybe 50 basis point was not purely based on recession fears.
And so if we got 50, would risk assets be spooked, do you think? That seemed to be the question we were asking a lot a couple of weeks ago, and then a few people pushing back just recently saying, no, the market might take that in its stride.
Okay, there are two reasons for us getting 50 basis points and for our call of 25 basis points this week to be wrong. The first is if the Fed decides to front load the Fed cuts, the cutting cycle. You start with 50 so that you don't have to kind of be on the back foot to react to weaker data, especially in the middle of election. You don't want to accelerate the pace. So that could be why they want to front load the cuts, but they may not want to kind of go ahead with the depth of rate cuts being priced in, and that's possible. Another kind of way for the Fed to start 50 basis points is if they see something that we don't know. But our assessment, and I think the SEP is going to be very, very important to pay attention to as well, is that growth is slowing down, but we're not talking about recession. And that being the case, hopefully markets are not going to overreact whatever they do on Wednesday.
Chinese data super weak. The US economy has been very strong. Chinese data still super weak. The US economy is beginning to slow down. What does that tell us about the aggregate picture for the global economy right now and how we should think about the recession risk that is posed by it?
I think recession risks have increased, but the base case is still slowdown rather than recession. To my earlier point about kind of just looking at the U.S. economy standalone, things are slowing down. Consumer sentiment is cooling somewhat, but we're still talking about pretty robust kind of growth levels that both our models are tracking as well as external nowcasting models are tracking. So growth is okay in the U.S., slowing down. Chinese growth is indeed very weak. We have seen piecemeal policy support coming through. Yep. We have seen rate cuts, government bond issuance, increasing local government support kind of being talked about. But we're talking about measures to kind of minimize the damage rather than measures to really kind of be the bazooka that some optimists were hoping for. So as a result of that, we have not favored Chinese assets, even though valuation is very attractive. We're talking about 40% discount to their U.S. counterparts. We haven't jumped into the market for that reason because we haven't seen the bazooka that is needed to turn things around. And in fact, given the structural kind of constraints and headwinds facing Chinese economy, such as aging population and the need for reform, we're talking about by the end of the decade, Chinese economy growth having a 3 handle, which is not much higher than many developed market economies, which is why we prefer developed market over emerging market at this juncture for our asset allocation.
There's a lot of unknowns at the moment. What's happening with politics, what's happening with the economy, what's happening with the Chinese response. Is the case for cash getting bigger at the moment?
Well, the case for cash has been bigger versus when yields were close to zero. Sure. So definitely we have seen significant inflows into money market funds, for example. But at the same time, we're talking about a period of potentially unprecedented transformations happening around us. When you add up the amount of capex that is needed for AI build-out for the low-carbon transition.
What's going to outperform cash at 5% at the moment?
What's going to outperform cash? We still like equities. You know, we like U.S. equities. We're overweight U.S. equities. We have been overweight U.S. tech, the AI theme. We see that theme broadening out. We see sectors like utilities, industrials, energy, for that matter, really benefiting from the broadening out of the AI build-out theme. So we're broadening out the tech-concentrated core into the broader U.S. equity market. And if we're talking about rate cuts starting and potentially the pace being faster as the Fed wanting to front load the cycle, which is not our view, but there is possibility of that happening, and economies holding up, I think equities can do okay. And credit, you look at credit, they have been holding up reasonably well, right? You look at the credit spread, we're still at multi-year lows. And yes, yields are coming down because rates are coming down. But from a kind of a building portfolio balanced perspective, barbeling equity with quality credit with belly of the curve is still a good way to kind of navigate this very uncertain environment.
Yeah, uncertain environment sometimes takes people into gold. Gold has been enjoying the run-up to the rate-cutting cycle, it seems, and especially when we start to get excited about 50 basis points, then gold seems to enjoy that quite a lot. Is that somewhere that we're going to talk to a commodities guest shortly on the programme about this and other commodities? I wonder, from your perspective, from outside, you know, the specifics of commodity markets, how does gold look to you?
Well, gold has done really, really well, and it's not just because of the real rate. It's negative correlation with real rate that has been pushing it higher. By our analysis, gold has been a better geopolitical hedge than oil has been. When you strip out the impact of the dollar and real rate from gold price appreciation, there is still a large part of the performance that is unexplained, which we attribute to the additional premium that it gets for being a good geopolitical hedge. So gold has been a good hedge, and especially in the context of rates going lower, there is a place for gold in portfolio construction for sure. Now, having said that, it doesn't have any cash flow, so it's hard to properly do portfolio optimization through cash flow return and discounting future cash flow. But we do think that there is a place for gold in long-term portfolio construction.
Wei Li, thank you very much. Thanks for joining us. Wei Li, BlackRock's Global Chief Investment Strategist, with us this morning to talk about her strategy this Monday. We should check the core six then, Guy.
Let's take a look at what is happening with the big stocks around Europe and how they're performing. As we've already mentioned, Nestlé is seeing a significant downgrade from Morgan Stanley this morning. You can see that and the impact of it on the right-hand side of your screen. Nestlé and Verve down by 0.7% this morning. Elsewhere, a more nuanced picture. You do see some of the pharma stocks bouncing back. Novo is rising this morning. But elsewhere, LVMH fairly flat, Ferrari down a touch, ASML up a touch, Schneider. It's interesting, actually, in the light of what is happening with Rexel, not moving maybe very much, only up by 0.2%. So that's what the big stock story looks like in Europe this morning. Let's dip into some of the other stock stories. That Rexel story, fascinating, Joe Easton.
Exactly, guys. So the focus really in the single stocks is on M&A this morning. We can see on the screen here lots going on. Firstly, that Rexel move. So we're up around 9% at the moment. But as you mentioned just there, we're not coming up to the price that was touted on this potential bid coming in from a US company. Now, Rexel did say that they do think it undervalues the firm. Therefore, potentially, investors thinking it won't actually get over the line. It was at €28, only trading at 25 at the moment. Another one to bring you is TI Fluid Systems. This time we're in the UK. It's a supplier to the auto space, makes brakes and that kind of thing. They've got a bid from private equity today, so that one coming up 14%. But another one that said they think it's opportunistic and undervalues the firm. But Rexel and TI leading the gains today. A couple of others to bring you just in M&A. Barclays, Brookfield walking away from a takeover of the company's payment division. That was potentially $1 billion, so that one coming down very slightly. And Commerzbank pretty much holding on to the gains that we saw last week following news of that UniCredit stake and those comments from Orcel over the weekend touting the partnership there. So those are all in focus in terms of M&A. One over in Italy to bring you is Saipem, up almost 5%. They've got a $4 billion contract for oil drilling over in Qatar, so that's a decent mover in Italy today, potentially a big deal for them in terms of the earnings. In terms of earnings in the UK, though, we have got Phoenix Group. Now, this one coming down. They've increased their dividend, but they're saying that they're seeing higher hedging costs than expected. They say that's due to the rise in interest rates. This is the UK insurer, and asset managers are coming down 2% despite that dividend increase today. Then staying in the UK, we've got some home builder data. Rightmove saying that house prices jumped around 1% on a year-on-year basis. That is more than expected. However, we have got risk events coming up this week in the UK, including inflation on Wednesday and then the Bank of England, of course, on Thursday. So those potentially taking the shine off this data. But the home sellers raising their prices, so we're keeping an eye on Barratt Taylor, Berkeley, Persimmon, all of those are usual suspects in terms of the home builders. Then in terms of the ratings, we have covered it already, but Nestle, we'll look at that one, down 0.7%. Only a couple of sells on that now. Morgan Stanley, as I say, I think that's the first time they've ever recommended selling Nestle in terms of our data anyway. That's what we're seeing. So that one is underperforming in the large caps. And finally, another one with a sell. This is MTU Aero, an engine maker over in Germany. Citi cutting it to sell. They say that the post-pandemic rebound in some of their engine sales for planes is actually coming to an end. So they recommend selling MTU. And that one is down 2% over in Germany this morning.
Joe, thank you. Joe Easton with a roundup of some of the stocks on the move then this morning. Coming up on the programme, we'll get back to some of the commodity themes. We'll discuss the effect of the Fed and the election on gold prices. Olislav Hansen joins us, Saxo Bank Head of Commodity Strategy, with the recent weakness in oil prices replaced by a short burst of strength, certainly this morning up 0.5%, 72.01 on Brent. We'll also get his views on what's happening in the oil sector. This is Bloomberg. Welcome back to the opening trade. We are 20 minutes into Monday's session. We have equity markets here in Europe trading down a little this morning. We're down 0.1% on the FTSE 100, down 0.3% over on the German market, getting the worst of the losses this morning. US futures flat pretty much on E-minis. Nasdaq futures down 0.2%. Let us just update you on what is happening in China and Shanghai specifically. The strongest typhoon in more than 7 decades has struck China's financial capital, bringing gale force winds and heavy rain to the eastern seaboard and disrupting holidaymakers at the start of a days-long national festival. We've got a couple of days of market holidays and wider festivities in China, really interrupted by this typhoon, Typhoon Bebinca. This is, we understand, the worst or the strongest typhoon to be hitting China since 1949. We've seen evacuations from parts of Shanghai and we've seen flights cancelled. So we weren't expecting any market activity there, but still, this clearly quite disruptive, and you wonder how far that disruption goes. Let's talk about that and other themes that potentially could impact on the commodities market. Let's talk to Olislav Hansen, who's Head of Commodity Strategy at Saxo Bank. Ola, really nice to speak to you. Thinking about China and Chinese activity levels draws our attention to the weakness in some of the Chinese data we got over the weekend, and then expectations perhaps of whether we go weaker on oil and broader commodity prices. What impact are you seeing in weak data out of China and what that does to the commodity space at this point?
Well, good morning, Anna. Clearly that the market is trying to adjust to a lower commodity demand in China. But at the same time, we've been basically dealing with these headline news now for the past 3 to 4 months. Also raising the risk that potentially some of these prices have overshot to the downside, simply because I think most of the bad news has been priced in by now. Most certainly the oil market, given the negativity we're seeing among investors, given the very high price we're seeing in gold, these markets are pricing in something that the other asset classes are not really showing right now, and that's really a potential recession or even a deep one. So I think at this point in time, we may have started to been fed this headline too much and for too long, basically meaning that the market has come to levels where we may start to see some value.
Yes, what do you think has overshot then? You're talking about the data out of China, the Chinese growth story, Ola, as if it maybe has bottomed out. So where do you see commodities having overshot to the downside?
I think energy is one of them. We've just been through, obviously, a couple of years where crude oil prices has been trading sideways. That's probably also why there's quite a lot of focus on the breakdown, simply because we've grown accustomed to relatively stable prices, courtesy of production cuts from OPEC in the past few years. But the break below 60 or below 70 in WTI is basically bringing U.S. shale pads closer to their break-even prices. Dallas Fed last week just said that the average price is around $65. So we're getting pretty close to that. So we are near levels where potentially some of this production growth that we are seeing from non-OPEC plus producers may start to feel the pinch a bit into next year. So that will help stabilize prices. But no doubt, obviously, that going from 1.3 million barrel demand in 23 to less than a couple 100,000 demand growth this year in China, that has been the big story this year, and that's one we're still watching.
Well, good morning, it's Guy. We're talking to our last guest from BlackRock, talking about the idea that gold is now a better geopolitical hedge than oil is. Is that correct in your view?
Oh, absolutely. Basically, gold or the weak oil price is also one of the reasons why gold is up here, because gold is pricing in some economic weakness ahead, and basically a world that's it's not really aligned. We're seeing the multiple different sources of support. Central banks is obviously one we've been focusing on for a couple of years. High net worth individuals, family office, they're all buying gold as a worry about the debt level in the world. We have multiple geopolitical risks. We have potential trade sanctions, uncertainty about the U.S. presidential election later this year. And on top of that, the rate cutting cycle, which is likely, which will start this week. So all basically just adding some additional support to gold. So I think gold strength is unfortunately a sign that the world is not perfect right now. And I think that's pretty clear for everyone to see.
Do I want to buy commodities into the Fed meeting this week on anticipation that we are going to see a 50 basis point cut that will deliver a further blow to the dollar, and that translates back into a stronger commodity picture?
I think that probably makes sense. If you look at the Bloomberg Commodity Index, we had this massive run-up since the pandemic. Then we corrected. We've been staying fairly stable for a while now at a low level, but we haven't corrected. We corrected less than 50% of that whole rally we had from 20 up to 22, 23, and that does indicate that we're starting to find some support here at these levels. I think the energy is one thing. Also, mind you, if we do start to see lower funding costs, that will help some of the countries that are where demand growth is likely to be the strongest in the coming years. And together with a weaker dollar, that potentially also is a sign that we're seeing some of the worst in the market right now.
Oh, look, gold seems to have enjoyed the conversation around whether we'll get a 50 basis point cut from the Fed. What's left to do on gold, do you think?
Well, just ride it out. It's been a tough one because we obviously have a lot of clients as well who wants to get involved, who has been looking for a setback. That setback has not really materialized, and that just highlights the underlying strength in the market. That the corrections have been very difficult to find. Also, the speculative community really got involved very early on this rally, so they're well in the money. So there hasn't really been the kind of volatility in gold like we've seen, for instance, silver, where a lot of people got involved quite late, and then we went through quite a big correction recently. That is now coming back up, and we saw gold and silver up 10%, or silver and platinum up 10% last week, benefiting from the strength in gold. So I think just hold on to it. Talk about the next level up is obviously difficult. We've reached several revised new levels, new higher levels, but I'm sure we will probably start to see headlines talk about 3,000 sooner or later.
Well, great to catch up. Thanks very much indeed. Ole Hansen joining us from Saxo. Up next, we're going to talk about what is happening in the United States, another assassination attempt on Donald Trump. We'll talk about the impact of that next. This is Bloomberg. Take a look where European markets are this morning. Stock 600 down 0.2%. Similar picture across most of Europe. In terms of the sectors, let me walk you through the action. On the upside, you've got a very defensive bias. The grocers are having a pretty good day today. The healthcare sector is not doing too badly. Downside, you've got the effect of China in the basic resources where we're seeing some weakness. Technology is soft. The car sector, the auto parts sector, is also weak as well. So that's kind of what is setting us up right now for a market that it's got a little bit to digest from the weekend, but there's a lot to look forward to in terms of Fed and other central bank meetings.
Yes, so on the macro front, central banks, 36 hours where we got a lot of central banks globally giving us their rate decisions, so that's going to be a focus. We also add into that what we've heard politically from the United States over the weekend. We've seen another shocking development in an already dramatic US presidential campaign. Members of the Secret Service have foiled a second assassination attempt in as many months on former President Donald Trump. Let's get more from Bloomberg's Bill Farries, who's been following the story for us. What impact is this likely to have on the campaign then, Bill? I mean, it wasn't as close a run thing as what we'd seen in July with the earlier attempts on former President Trump's life, but this no doubt worrying.
Right. Fortunately, the Secret Service agent who was one hole ahead of the president on the golf course appears to have spotted a rifle poking through the fence, fired in the direction of that rifle. The person there fled, and police say they captured the suspect in a vehicle on the highway north. In terms of the political impact, we'll have to see in the coming days whether this changes anyone's views about the race and who they're going to vote for. But for Donald Trump and the Republican Party in general, it does offer them a chance to turn the page from what has been a very rough week since that presidential debate on Tuesday last week, in which the former president was seen as really underperforming. A lot of the political discussion since that debate is centered on Trump's comments about immigrants allegedly eating people's pets. That has not been a winner for the Trump-Vance campaign. This shooting may allow them to move on to focus on things like the economy, where voters still give them fairly high marks, and where they would probably like to focus their energies in the final 7 weeks of this campaign.
Bill, is this likely to have any impact on Donald Trump's ability to campaign? 2 attempts on his life in fairly quick succession. The Secret Service, I imagine, are tightening things up in a fairly big way. How is this likely to affect his schedule, do you think?
Yeah, we know already that the Secret Service had added extra layers of protection to the Trump campaign since that first assassination attempt. When we have seen him out in public at rallies since then, he's been more behind a kind of a bulletproof barrier, so a little bit more separated from the crowd. I think, listen, in this case, there's early praise for the Secret Service and their work on the golf course, but there is going to be another look at how they protect the former president and Kamala Harris and the 2 vice presidential running mates when they are out in the open, and whether there's more that could be done. It does lead to the risk that they're a little more isolated when they're out in these making these public appearances.
And there'll be an investigation, of course, around the particular suspect here, who we know has been taken into custody. Bill, you nodded to it a little bit earlier, but we don't have a very clear picture yet, I suppose, of what might have motivated him.
We don't know that many details. A 58-year-old man used to live in Hawaii, has a long history with law enforcement going back 20 years. NBC reported, based on court documents, that he was once convicted of owning a machine gun. He may have been charged in a hit-and-run accident. More recently, he has been very worked up about Russia's invasion of Ukraine. Even did an interview with the New York Times about a year ago, claiming that he was trying to help recruit foreign fighters to go to Ukraine and fight on the behalf of the government in Kyiv. We don't know how much of that really took place, but it's clearly an issue he's been very worked up about, and we don't have a sense of his political leanings or grievances, particularly with the Trump campaign at this point.
In terms of what happens next, just walk us through what Anna was alluding to whether or not we're going to see a move in the polls. The early indications appear to be, certainly from the betting markets, that we're not seeing the same kind of bump that we saw for Donald Trump post the shooting which nicked his ear. What are we hearing in terms of the expected impact this could have in terms of the polling? Does it have the same effects? Is there an expectation that will have any effect in terms of people's thinking?
It's a great question. I mean, this is a very different, it's a different campaign now. You even have a different candidate, right? With Kamala Harris in the race, you have Democrats who are very motivated. When you had that first attempt on Donald Trump's life, Democrats were very unmotivated. There was a lot of questions about whether he should get out of the race at that point. That period came after several weeks of good news for Donald Trump. So it may not have anywhere near the impact that first assassination attempt did. And in particular, there's none of that imagery so far, at least, no dramatic video of what took place on the golf course. You had that in the aftermath of that first attempt, when the president stood up after getting hit and, shouted fight, fight, fight to his supporters. Those elements also helped propel that bump in the polls at the time. We don't have that this time around.
Bill, great to catch up. Thank you very much indeed for updating us. Bill Ferris joining us on a second attempt on Donald Trump's life. Coming up, Germany imposing controls on all of its 9 land borders. This as the Chancellor Olaf Scholz faces increasing pressure over migration. We'll be live in Berlin with the latest on this story and a few others that are certainly moving here in Europe this morning. We'll talk about it all next. This is Bloomberg. Minutes into the equity market session, this is the picture you're looking at. To be honest, I'm not sure there's a clear kind of narrative coming at an index level out of Europe this morning. We're waiting, we're watching. In terms of what you're seeing in the sector story, you're certainly seeing a dash for safety this morning. You're certainly seeing the grocery sector doing well. The healthcare sector is outperforming. Miners, technology underperforming this morning. Certainly the China story being represented well here in Europe in terms of where the sector story is working. Let's talk about what else is happening in Europe this morning, because there's a few interesting stories out there this morning, certainly on the political front, that I think are probably worth spending a little bit of time on. I want to talk about the migration narrative, which I think is really represented in a number of different parts of Europe this morning. But what I really want to talk about is what on earth is going on in Brussels. Because Thierry Breton, who is the current, actually he's not the current, he was the Internal Markets Commissioner in the current Commission, has resigned this morning in a fairly strong way. He has made it very clear that he is being pushed out. He has made it very clear that he has a certain degree of animosity, it certainly would seem, for Ursula von der Leyen. And this was what he posted just a few minutes before he resigned. His picture, apparently, at the European Commission, blank. Let's find out what is going on. Ollie Crook joins us now from Berlin. Ollie, he's not going quietly.
Guy, this is a really spectacular way to resign. I mean, we talk about strongly worded letters. So he put out that tweet first, that empty canvas, saying that this is his portrait for the next European Commission, because, of course, he is the commissioner that France has put forward for their nominations. And, of course, it's a blank canvas. That was a bit enigmatic. A few minutes later, we got the full letter. And I'll just quote bits of it here directly, because I can't really do anything better than that, saying that a few days ago, in the very final stretches of negotiations on the composition of the future college, you asked France to withdraw my name, this is a letter to Ursula von der Leyen, for personal reasons that in no instance you have discussed directly with me, and offered a political trade-off, an allegedly more influential portfolio to France in the future college. You will now propose a different candidate. We should say also, he said that in light of the latest developments, further testimony to the questionable governance, I've concluded that I can no longer exercise my duties. He's therefore resigning from the European Commission immediately. So this obviously is a really very sort of explosive way to resign and air unhappiness. There's a lot of negotiation, as we know, that goes on behind the scenes in Brussels, and people tend to like to leave that behind the scenes rather than coming out like this. We should also say, I mean, here's another passage here. Over the past 5 years, I have relentlessly striven to uphold and advance the common European good above national and party interests. It has been an honor, but perhaps not over the interests of personal bitterness, as we're learning from this letter today. Really a very spectacular way for a very influential figure within Brussels to go out.
And do we know why Ursula von der Leyen took objection to his nomination or his continued presence in the Commission? I mean, this is somebody who, of course, has had to deal with a lot of big tech bosses over in the States, and that's taken him into a digital conflict, shall we say, with Elon Musk.
Yeah, so without going into too much speculation, we do have some reporting on this throughout behind the scenes that they did not get along particularly well. So, of course, he's in his role as sort of digital enforcer. He had a few months ago written this sort of letter to Elon Musk. Again, a very blistering letter that he, again, unilaterally put out on X, and then immediately came under huge criticism, not only from Elon Musk and the United States, saying that basically this was tantamount by some of his critics of meddling with the U.S. election, but also within Europe, and his own team had to sort of row it back. So he's a sort of controversial figure to a certain degree. What we also understand is this could also have to do with something that happened earlier in the spring with one of the figures that was in charge of SMEs within Europe who resigned, was very critical of Thierry Breton. The person who had resigned was part of the CDU, which is obviously Ursula von der Leyen's party as well. So there has been conflict throughout. What is interesting is that Ursula von der Leyen, if this is in fact what happened, would ask Macron at this late stage to do that. Why she would do that now rather than earlier on, I think is a bit of a mystery to everybody. But again, it catches a lot of people off guard here in Brussels.
Europe does not feel like it is on the same page right now. We have this story, which we need to fold into that narrative. The migration story as well. This on a day when Germany decides it's going to close not only its land borders or start checks on its land borders, not only in the east, but also in the west. Ollie.
Yeah, listen, Guy, I mean, this is an extension for 6 months from some of the checks that are already going on. So these are going on with the Czech Republic, with Poland, with Austria. But this is also now enforcing border checks for Germany on all of its land borders. So that includes Denmark's, now Belgium, France. And this is really a move that effectively suspends Schengen, right? I mean, you're allowed to do that legally within the EU for temporary periods of time. But we've had some of these checks in some of the countries there, the ones in blue, as you can see, since October. Austria, it's been a while longer, but this now effectively puts border checks on the entire border of Germany. This is one of the anchor nations of Europe, one of the great pro-European nations, and under a government of a socialist Olaf Scholz, coming under intense pressure politically from the far right and far left, going into another election this weekend where they're hoping some of this tough talk on immigration will be able to help them. But as you say, Guy, this does not bode well at all going into particularly a new commission where you really need European unity, particularly when you think about all of the issues that Mario Draghi has been enumerating last week. And if you're going to handle them at the European level, you really need unity. You're getting pushback from that now. We had Viktor Orban and Geert Wilders both really praising this move from Germany. So that's the praise that's coming in this morning for the Germans' move to today, creating those border checks.
Yes, if you have border checks between France and Germany, where does that leave Schengen and the wider EU project, I suppose, Ollie? But on the German specifics, it is really interesting. We're heading towards this another regional election, as you point out, next weekend. Again, migration being talked about, trying to talk tough on migration. But at the same time, you have Olaf Scholz talking to leaders from Kenya, to Uzbekistan, and today Kazakhstan. And part of those conversations is about controlled, skilled migration to Germany, because there's still how you deal with a tight labour market is still an issue.
Completely, Anna. And this is like one of the big dilemmas that Olaf Scholz is dealing with and Germany is dealing with. On the one hand, you have all of these issues with migration. And we should say that Germany is one of the biggest recipient of refugees on the planet. Number 3, it has more than 2.5 million people that have come under refugee status. But what Olaf Scholz is also dealing with is a huge demographic problem in Germany. They have been sub-replacement rate for more than 40 years. It's at 1.5 now. 2.1 is replacement. The sort of average over those 40 years is 1.4. They estimate 2 million job vacancies right now in Germany, and that is going to blow out to 7 million in 10 years' time. That is a problem that they cannot solve just by having more kids. They need skilled labor. They estimate that you need about 400,000 workers every year. So that's where you get deals like we got on Friday with Kenya trying to bring in more people to try to fill in that gap. Of course, that will not go very well with the sort of proposals and everything we've heard from the far right and left that are doing extremely well in Germany. So we talk about all these slow-burning crises that we really see coming down the road eventually, and the real difficulties in dealing with them. This is going to be a really interesting way in seeing how this plays out, because again, Brandenburg election this Sunday, I mean, the AfD is supposed to win. Scholz is within a couple of points. Let's see what happens, but immigration is top of the agenda.
Ollie, thanks for the roundup. Greatly appreciated. Ollie Crook joining us out of Berlin. I want to take you to another story that is also a big issue in Germany right now. BMW shares down by 0.4% right now. It has been a move that has been extended over the last few days. This after revelations that the German automaker has taken 2 years to discover the extent of a braking system fault that brings in companies like Continental. Now, Bloomberg understands that customers and dealers began complaining about this issue to the company as early as June 2022. So this has been going on a while. Joining us now, Bloomberg's Elizabeth Berman, joining us out of Munich. Elizabeth, on an almost daily basis, you see coming across the news wires talk of recalls affecting various vehicles around the world. Now, normally we ignore these. Why is this one different? What happens now, and how big a risk does this represent for BMW?
Yeah, like you're saying, recalls do happen all the time, but I wouldn't quite agree that we tend to ignore them. I mean, think back to the Takata airbag disaster, like involving tens of millions of vehicles. And this one is certainly significant as well. It stretches across 1.5 million vehicles just at the BMW group. and it involves two of the biggest names in car making, BMW and Continental. As we describe in this story, this has been bubbling under the surface for quite some time, with the true extent of it only coming to light a few days ago. It shocked the market, as we could see. Both companies' names, they fell about 10% that day, wiping billions of their respective market valuations. In terms of the broader significance, I would mention that both of these names are, of course, under pressure in this massive transformation that's sweeping across the industry. Some are doing better than others. I would say that BMW has been selling more cars compared to their traditional competitors on the EV front. But whereas Continental, I would say, has definitely been struggling a lot more. They've tried many things to improve their auto unit, and have this sort of a thing happen to them at this point really is quite a negative, as they seek to spin off the auto business that they've got.
Elizabeth, where does this go next? What are we expecting to see? What are the kind of risks that this becomes bigger?
A few facets to this. I mean, on the one hand, you'll have the operational side of things. The cars need to be checked. We understand BMW has developed a software to check over the air whether a car is affected. Then some of these will have to come in for fixes, repairs. Perhaps the whole braking system has to be exchanged. That also depends partly on what regulators want in individual regions. But on the other hand, there's also the risk of this perhaps even spreading. And like I mentioned just now, Continental is attempting to spin off its auto unit. So it's a central product for them, this braking system. So to have something go so wrong there, that would really raise some questions about timetables around this push.
Can it do that spin with this going on, do you think?
I think the jury is out on that. Also, we haven't quite probed the depth of the issue. We've not really heard anything on the record from Continental itself. So it's a work in progress, I would say, but it has knocked the company significantly in terms of this plan as well.
So, I mean, this just one part of a much broader negative story that we're seeing, Elizabeth, coming through sort of week by week from German automakers. Any sense that this is in any way coming to a head, or we're going to see some a resolution of these issues? I mean, Chinese competition, yes, we've got tariffs on it. There's still a debate about what those tariffs should look like, but it's not going away.
Yeah, I think you were just talking about sort of several slow-burning crises hitting Germany, and there is definitely a sense of a lot of negative developments that have been ignored for too long coming to a head right now. On BMW and Conti specifically, I think that is perhaps a part of that, but it wouldn't be the dominant thing in terms of, ignoring developments, not paying enough attention. But yeah, it just definitely adds to the sense of doom that this core industry in Germany is undergoing right now.
Elizabeth, thank you. Thanks for joining us. Bloomberg's Elizabeth Behrman on the auto sector and the latest BMW lines around it. Let's just, Guy, dwell on what's coming up this week, because as we've said a few times, it's going to be a big week in terms of central banking. But there were a few other things to watch. We have some central bank speakers from the ECB starting the week off. We also get data then on Tuesday from the US in the shape of retail sales. That could be interesting. ZEW as well. Then on Wednesday, we get UK inflation data, a day before a Bank of England rate decision. Of course, we get the Fed rate decision that day as well. And on Friday, we bring things to a conclusion with the BOJ. The last time we heard from the BOJ, and we got some important US data, things weren't smooth.
And it's interesting, the language recently from the BOJ has been more hawkish. We've certainly had, from even the dovish end of the spectrum in terms of the voices we hear from them, a signal that maybe we need to be thinking about the BOJ raising rates on a more consistent and earlier basis. So I think that's interesting. The Fed, I think, is interesting. In some ways, 50-25 is maybe the wrong thing to think about. Because regardless, if you get 25 or we get 50, maybe what we need to think about is the spin that is put on it.
Yes.
Because you could get a hawkish 25, a dovish 25, and the signal is that we're going to do much, much more coming down the road. We're starting off cautiously, but we're going to do more. If they go with 50, because it is a signal, and the language that goes with this is a signal we're getting in early.
Yes.
We're kind of making, if we do more now, maybe we have to do less later. I think it's that nuance that I think is going to be interesting.
And I think dots are always interesting when we get updates, but in particular this time around, we'll get an update when we're really close to the end of the year. So the dots they'll have to give us what they're expecting to do by the end of the year, which is essentially telling us what are you going to do in November, December. And even if you don't want to give too much guidance to the market, the guidance will be there in those dots. So even if it's anonymised, we will have a sense of what the body, what the full body of the Fed and the FOMC thinks is going to happen between now and December, in the context of whether they did 25 or 50.
Thinks is going to happen.
Yes,
I think is the key kind of phrase there, because this has been a year of incredible turbulence.
Yes, we started the year thinking that we'd get seven, I think. Yes, at 1.7 rate cuts from the Fed. We didn't. We haven't got any yet.
No.
But the market has come a long way on the expectation that we will get some this week.
And the market appears to... The market always wants more. So is the central bank in the same camp now? Are the market and the Fed aligned? They've been very, very unaligned for large chunks. So I'm just kind of... I'm wondering how... Also, I think the market will play a role in this process. If the market pushes the Fed quite hard, i.e. positions aggressively for rate, is the Fed going to dismiss that market positioning and tell its own narrative,
and
or will the market make the weather?
Yes, and risk tightening financial conditions if it does that.
Precisely.
Yes, and because the market is expecting 100 basis points by the end of the year, and so if the dots don't give you something that looks like that, where does the market go? What does risk appetite look like in that context? So there's that to think about. Lots of other central banks, the Bank of England, the BOJ, not expecting them to move this week, but a lot of thinking about, the budget in the UK's case, or wages and inflation in the Japanese case.
Absolutely. The fiscal story is, Crudy's not sitting here, but the fiscal story is definitely going to be represented. And I think you can kind of park the Bank of England, certainly,
until
we get that budget at the end of October.
Yeah, because we need to see the extent of tax hikes, what that's going to do to the economy, or expectations for that, and therefore what that does to the models over at Threadneedle Street. A lot to talk about this week. The Pulse is up next. Francine will be speaking to the CEO of Air Baltic as the Latvian carrier prepares to go public. That conversation at 9:40 London time. This is Bloomberg.